Ladies and gentlemen, good day and welcome to the Punjab National Bank's Q3 FY22 post-results conference call hosted by Batlivala & Karani Securities India Private Limited. As a reminder, all participant lines will be in the listen-only mode. Should you need assistance during the conference, please signal an operator by pressing star and then 0 on your touchtone phone. Participation in this conference is by invitation only. Punjab National Bank reserves the right to block access to any person to whom an invitation is not sent. Unauthorized dissemination of the content or the proceedings of the call is strictly prohibited, and prior explicit permission and written approval of Punjab National Bank is imperative. Please note that this call is only for investors or analysts. I now hand the conference over to Mr. Surat Das from Batlivala & Karani Securities India Private Limited. Thank you, and over to you.
Thank you, Mohsin. Good afternoon, everyone, and thanks for joining the call. On behalf of Batlivala & Karani Securities, we welcome you to Punjab National Bank's 3Q FY22 post-result conference call. We have with us today the management team of Punjab National Bank, represented by Mr. S.S. Mallikarjun Rao, MD and CEO, Sir, Mr. Atul Kumar Goel, the Special Officer on duty, Mr. Sanjay Kumar, Executive Director, Mr. Divijay Dubey, Executive Director, Mr. S.K. Saha, Executive Director, Mr. Kalyan Kumar, Executive Director, and other senior officials of the bank. I would now request MD and CEO, Sir, to start the call with his opening remarks on 3Q FY22 results, post which we will start the Q&A session. Thank you, and over to you, Sir.
Right. Good afternoon once again. I'm Mallikarjun Rao here. I have with me Mr. Atul Goel, who is a MD designate, who will be taking charge from 1st of February. Now, with respect to the results, what we have declared yesterday for the quarter ended 31st December, I would like to just give the key highlights. Our operating profit has improved by 26.24% on quarter-on-quarter basis. Net interest income has increased by 22.8% on quarter-on-quarter basis. Global net interest margin has improved by 54 bps to 2.93 in Q3 FY22 compared to 2.39 in Q2 FY22. Cost to income ratio has also improved by 660 bps to 51.67% in Q3 over Q2. Fee-based income has increased by 10.2%. Then return on equity improved by 7 basis points. Gross NPA stood at 12.88%. That is a reduction of 75 bps sequentially on quarter-on-quarter compared to September 21. Net NPA stood at 4.9%. That is a reduction of 59 bps compared to the position as on September 21. Provision coverage ratio excluding TWO has improved by 200 basis points to 65.17 in December 21 compared to September 21. Capital adequacy ratio has improved to 14.91%. Now here I am using the word very clearly improvement. I would like to give a little more clarification here. The capital adequacy ratio stood at in September was 15.20. As you are aware, the pension liability, because of the new guideline earlier, for the banks, RBI has permitted them to amortize over a period of 5 years. Accordingly, our overall liability has been 3,000 crores, 3,070 or 3,060 crores, out of which 1/5 we have already debited to P&L. Remaining amount has been kept for amortization in the next 4 or 5 years. However, here the entire amount is required to be allocated for the capital when taking the capital adequacy ratio. So roughly around 34 to 35 basis points are the ones which are allocated here. If you look at adjusting the figure of 34 basis points to 14.91, it will be 15.25. There is an improvement over what was there at the September. Second, retail credit has grown by 7.7%. Agri has grown by 6.2%. These are all year on year. MSME has grown by 4.1%. Domestic CASA share stood at 45.65. There is an improvement of 99 basis points. Savings has grown by 8.76 year on year. CASA has grown by 7.59 year on year. And further, in terms of the efficiency ratios as well, there has been an improvement in terms of NIM, in terms of cost on deposits and other ratios. The growth within the retail also we have seen a good amount of growth in housing loan, vehicle loan, personal loan and gold loan. Composition of RAM has also increased from 51.8% to 54.3% at the end of December 21, 250 bps year on year basis. In terms of government related to private sector lending, all the requirements under regulatory have been met by us. In terms of profitability, the improvements you will observe on quarter-on-quarter basis. In terms of year-on-year basis, there has been a reduction in terms of net interest income as well as operating profit. predominantly because in December, the NPA identification, December 2020 NPA identification was not there for a period of 9 months. NPA was identified only in the month of March, as a result of which the accumulated position because of the interest recognition and other things, the position was elevated at that time. Though we have made provision, it was a provision under standard, but the income was recognized. So 28,000 crores of NPA has become in March 21 because of that reason. So that if you look at consideration, the comparative position is better represented on quarter basis. With respect to asset quality in absolute terms as well, gross NPA stood at 97,259 as against 1,291,000. In case of net NPA as well, it has come down to 33,879 crores as against 36,934 crores. Besides the reduction in the NPA ratios, we are very confident that the NPA ratios further will be reduced by March 2022 and even March 2023. In the current GNPA of 12.88%, at even conservative level, we are very confident it will come down below 12%. And in case of 4.9, we are expecting at the very conservative level less than 4.5. In fact, our endurance will be to bring it below 4 by March 22 itself. In case of March 23, the further improvement will be there because there are many areas which, in terms of even transfer to NER, CL or otherwise, they have not taken place. Even if something happens before March, it could be only TWO accounts. But in realistic sense, more and more accounts could be transferred in the next financial year. There have been a lot of initiatives we have taken in terms of digitalization as well, and even fintech related activities, particularly for co-lending. We have entered into arrangement with 4 companies, and as on today, even though traction is not there, but we are expecting good amount of traction to move forward because we have done these things recently. In terms of fintech usage for digital lending, this also we have tested on pilot basis in the last 4 to 5 months, and we have reviewed in terms of the parameters determinable for pre-approved lending. That also we are expecting the traction to move up much better in the current quarter, but much more visible in the next financial year. These are the preliminary observations from my side in terms of the quarterly results what we have declared. Now I'll be open for the questions from your side. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, please press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have our first question from the line of Maruk Attajania, an analyst. Please go ahead.
Hello, sir. Hi. So, my first question is on your credit cost. Why has it risen sequentially?
No, why are we present sequentially means?
Why has it increased sequentially?
That is because we have done additional provisioning in some of the NPA accounts.
Okay, so that's aging based only.
No, much more than what is required from the regulatory perspective.
Got it, sir. So the second
I
question
can be very clear. In one account we have provided very high. That is SWAY account.
Oh, so you made extra provisions there.
Extra provision there, even though it is not required as per regulatory.
Got it. So what will be your total provisioning on SHRE right now?
70%.
Okay, so that's one of the highest. Okay.
Yes.
And so the other question is, what would be your outlook on loan growth? So we've seen good traction this quarter, but going ahead?
Correct. You're absolutely right. If you look at the quarter-on-quarter growth, it was at 2.66%, which is much better if you compare with any other quarter in the past. This is because last time also, if you remember when I have spoken in the analyst meet, we have created a good pipeline of sanctions. It is just a matter of time for disbursement. In fact, this 2.66 to a certain extent is muted because Air India amount in the last week of December, we have received 4,000 crores in the standard category where we have repaid. As a result, it is muted to that extent. Otherwise, the growth would have been little even better. And the pipeline is still there. As a result, our confidence is around 6% growth at the end of March 22. And by March 23, it could be anything around between 8 to 10% credit growth we are envisaging.
Got it, sir. And what is your outlook specifically on MSME? Because a lot of state-owned banks now are becoming again, have lent a lot to the MSME sector again in this quarter. And we hear that there were some MSME schemes also. I mean, while COVID would have impacted this sector, why is there a fresh round of lending aggression there again?
No, fresh line of lending, if you intrinsically look at that, majority is only emergency line of credit. Even in our case also, around 19,000 crores as on today has been sanctioned in the last 1.5 years under the emergency line of credit to MSME. And that is very important input for the MSME because they are going through tough time because of the COVID. With respect to stress in the segment, if you look at under OTR and OTR 1 and OTR 2, the restructuring profile of our bank has not been very high. It is together around 18,000 crores. And even if we look at understanding whether any amount of slippage has been there, it is also not very high. Maximum is 1,000 to 1,100 crores. Is the slippage overall? In this quarter, it was only 500 crores from the OTR 1. So, majority of lending to MSME incremental has happened through emergency line of credit where government guarantee is available. And not only that, they are all for the existing borrowers where the units are working. With respect to normal lending to MSME, there are green shoots where opportunities are there, but it has not been very aggressive as on today. If you look at our growth, it was only 4% growth in MSME, 4.1% growth, but it can be much better in the next few quarters to come because investment by the private party in large corporate will also create impetus for ancillary industries and MSME segment.
Got it, sir. Sir, and just in terms of asset quality, you did mention that you received 4,000 crore or Air India. So would that be all? Is the entire amount now received, and how much provision did you reverse there? And even in terms of future, that is classified still as SMA 2?
Which one?
Future.
Okay. So as far as Air India is concerned, 4,000 crores received December and the residual amount of 900 crores received during the current month. So now it stands without any outstanding balance. It is zero from Air India side. Because they paid everything, they have taken over the account also from Government of India. So provision reversal has been there to the extent of around 400 crores in terms of Air India. More so in terms of the interest recognition.
Interest recognition. Yes. Okay. And future?
And together it is 1 minute. Together how much? 700 crores.
Reversal 400 plus remaining plus provision.
Provision and interest recovery together impact is around 1100 crores.
Okay, so 400 has gone to
interest reversal. 400 is interest recognition and the remaining is the provision reversal.
Got it. And sir, what is the status of future retail?
Future retail, it is a standard as on today because it is a restructured account. But we are waiting for the situation. Now they may default in terms of payment. They have approached the court intervention. We'll wait and see. If required, that is not a very big, huge outstanding. It is around 980 crores, which we can take either way. There won't be any problem. And in case it has to become NPA, we can do that in the month of March, and we can even provide adequately.
Oh, we have made provision of
20%. 20% is already there provision.
Perfect, sir. Thank you so much.
Thank you. Participants ask a question may press star and 1 on their touchtone phone. We have our next question from the line of Dave from Horsepower Securities. Please go ahead.
Yes, good evening, gentlemen. I want to ask you regarding this increase in gross NPA of around 4,000 rupees. Okay, 97,000 crores minus 94,000, if I am not mistaken. Okay. So what did led the increase in this quarter suddenly? Which account of?
No increase. Yeah.
There is no increase. Where is the figure of 94,000? 97,000 is...
No, 97.
97
this
is
quarter
figure. Earlier figure was 1 lakh.
No, that was the earlier quarter. I mean, sequentially earlier quarter, the October quarter, right? September quarter.
1,291.
1,291. Yeah. Right. So sequentially, I mean,
it has come down. No? It has come down to 97,000.
97,259.
Yes.
And the year on year, are you looking at year on year?
No, sequentially. I'm talking about the sequentially, October.
It has come down.
Yes. And year on year also come down?
No, year on year, what you are telling 94,479. Yeah, it is 97,000. You need to be referring to March results where a accumulation of 9 months NPA identification because of Supreme Court judgment has happened where the NPA accretion was around 25,000, 28,000 crores, fresh addition. That was the reason. That is why December figures, 20 figures are not comparable. Sequentially, later on, if you look at, it has been a reduction in NPA.
Of course. And the extra 500 crores provision you declared on that NPA, right? You have provided for. The schedule you have provided in the notes of accounts. The schedule in the schedule of notes of accounts, you have shown the breakup that 500 plus crores has been provided excess. So that the excess portion is related to that SC Supreme Court judgment.
No. Supreme Court judgment has come in March only, and that matter is closed there. Already NPAs have been identified. The extra provisioning is related to different factors. For example, as I have indicated earlier, we have done extra provisioning in case of Shrey account. Even though the requirement is lower, we have made additional provision, and currently the provision coverage is 70% in terms of that account. So wherever there is a requirement, we have provided additionally. Much more than what is under regulatory requirement. If you are reading the notes on accounts of December 20, you may be finding this figure. This 500 crores was extra provided only for the sake of pro forma NPA. But not now. It is not related to December 21.
Thank you. We have the next question from the line of Manas Pratim. Please go ahead.
Good evening, everyone. Am I audible?
Yeah, you are audible.
Congratulations, sir, on the wonderful numbers. What I wanted to ask you is, how much of your NPAs have you transferred to NARCL, and how much are you planning to in the near future, as in by Q4 FY22 and 23?
See, so far we have not transferred anything because NARCL is yet to take shape. Originally identified figure was roughly around 8,000 crores, out of which more than 7,500 crores was totally written off accounts, TWO accounts. However, after scrutiny by the NARCL and discussion IBA had with various banks, this amount will be transferred to them in 2 or 3 tranches. See, first tranche could be anything around 2,200 to 2,300 crores, and the next tranche will be little more than 4,000 to 5,000 crores, and the remaining out of the 8,000 crores will be transferred in the third tranche. There is a delay in functioning because of anticipation of final approval from RBI. We are also saying once it happens, the transfers of the money can take place, though the amount of transfer will not impact the balance sheet because they are under TWO. However, there can be a positive impact on the profitability based on the amount what we receive in the cash component of 15%.
All right. Thank you so much. Thank you, sir. That's all.
We have the next question from the line of Aditya Ranjan Patnaik from HCL Capital. Please go ahead.
Hi, good evening. My question on total assets. How you distribute as per now your double and below asset allocation?
Voice is not clear. We are unable to understand.
Hello, right now it's clear?
It's clear, but it is reverberating. As such, you can continue. Let me see how I can understand.
Okay. My question on that, how your asset allocation will be distribution, because currently near about 90% and above 90% are below triple asset class. So that.
No, I'm not able to understand what you're talking about.
Rating.
You're talking about rating?
Yeah.
Right.
Oh, okay. 100 crore and above, we have given the details to you. 100 crore and above, we have given the details in the presentation at page number 11. And triple B and above, it is 91.92%. And double B and below, it is 5.86%. Unrated is 2.22. That is the status which we had indicated. Any further?
Double B rated papers are increased in this quarter on quarter. Do you think that how you increase further? Do you increase further, or you will reduce in this rating?
No, increase. What increase? That is better rated. 91%. No. It is because our consciously considering only AAA category and AA category. That is the reason why you will find in AA marginal increase, AAA also marginal increase, but the better increase was there in EA. The reason is that we have reduced our exposure in BBB and below, as a result of which you have found that difference. So there is a qualitative increase in terms of the higher rated advances, above 100 crores. And this will improve further as well.
Thank you. We have the next question from the line of Sneha from Shubhkam Ventures. Please go ahead.
Sir, two questions from my side. Just wanted to know, considering how do you see the overall credit cost from here on? Second question is, and what is the outlook on the asset quality? Basically, what is the guidance on the slippages, as well as how much we are expecting recoveries and upgrades going ahead?
Right. See, regarding overall credit cost, if you look at currently, we don't have any bigger stack to become NPA from the corporate segment. Only from RAM segment, whatever is coming, it is coming. However, we wanted to strengthen the balance sheet effectively if there is an opportunity for increasing the provisioning. If you look at technically as well, the credit cost remaining for 9 months at 1.72 at the end of December could have been lower as well if you look at provision requirement only complying to the regulatory position. However, we have done additional provisioning. As a result, credit cost appears to be high in NPA account, but in reality, it was with an approach of strengthening the balance sheet. Particularly where I had given saying we have increased the provision up to 70%. Even we may do 100% by March, depending upon the availability. Even at that time, it appears to be higher provisioning in the NPA category, wherever such kind of requirement is there. But overall, if you look at our guidance will remain 1.5%, because we are very confident that the control on slippages will be there. If you observe the slippage control, slippages, fresh slippages also from March 21 onwards. In June, it was more than 8,800 crores. In September, it was 6,800 crores, whereas now it is around 3,800. So there has been a very good improvement in asset quality. Collections improvement has been there. So our guidance will remain around 1.5 in terms of the credit cost. So what was your second question?
Asset quality.
Asset quality is improving, and you must have seen in terms of the percentage improvement in gross NPA as well as in net NPA. 12.88 gross NPA, we are very confident at the conservative level by March 22 to bring it down below 12%, below 11%. How much is now? 11.88. 12.88, it will be below 12%. And in case of net NPA as well, currently is at 4.9. It could be, even we can try for below 4, even though the conservative target could be below 4.5. Because we are seeing good amount of credit growth, good amount of recovery, as a result of which there will be an impact on the gross and net NPA in a downward vertical outstanding. And 22-23 also will be very good in terms of controlling the gross and net NPA ratios, as well as improving the asset quality.
Okay. But sir, when you mention about the growth is coming from the which segment, sir?
Yeah, all segments, madam. Generally, you see, quarter to quarter there may be a shift here and there. Particularly for the December quarter, there has been a shift towards RAM segment. That is why the composition of RAM has improved to 54% from 51% year on year. In the month of October, we have launched a campaign of 6 years, particularly 6 means particularly on RAM segment, retail, MSME and agriculture, by identifying certain clusters for MSME growth. So even though the growth percentage is 4.1%, there has been good amount of recovery as well, as a result of which the fresh sanctions are muted. We have done even emergency line of credit in MSME sanctions. Corporate also, we have grown well, we have sanctioned very well, but because of pressure of interest rate, some of the outstandings have been shifted from one bank to the other, and also there has been a recovery during the month of December to the extent of 6,000 to 7,000 crores unexpected in terms of the corporate, including the Air India, which has little reduced the outstanding of the corporate. Otherwise, as a big bank, large bank, we look at every segment to grow, that is credit delivery to happen in every segment.
How do you see the overall treasury income moving from here on, considering the yields remain elevated from here on?
It will be reduced definitely. If you look at treasury income has gone down compared to year on year. In the current year also, it has come down. September 21 it was 1,048 crores, and December now it is 614 crores. So it will remain. If you even closely observe, or rather probably it may not be there in the presentation. As per RBI guidelines from HTM, we can sell up to 5%. That is like a available amount which we did not do that. We have only used up to 1.4%. Still there is a 3.6% available which we will do in the next quarter. So in the that is current quarter. Even in March quarter as well, we are confident of getting a little over 500 to 600 crores in treasury. But in the next few months to come, few quarters to come, or next financial year, it will be muted. It will not be as high as what we were earning in the last 1.5 years because of firming up of the interest rates. Nevertheless, even we'll have a control on MTM as well.
Okay. And how do you see the overall margins to be panning out, considering if RBI goes for the rate hike for this next calendar, for the current calendar year?
Margins, net interest margin has been under stress in the last 1.5 years because of the high liquidity pushing the interest rates low on credit. Commensurate reduction did not take place in the deposit. That is the main reason across the banking industry, and PNB is no exception. Now, coming for the future, if you look at in December, we've improved our NIM to December quarter in isolation to 2.92, whereas overall it remained at 2.68 globally and domestically 2.75. So by March also, our NIM will be more than 2.75 overall. That is at the minimum level what we are looking at. But in the next year, definitely there will be an improvement. We would have been very happy to touch around 2.9 to 2.95, which we can do it in the next year because we had very tough time during the last 1.5 years in terms of pressure on interest rates, which is slowly easing out because of RBI's policy of sucking the liquidity and firming up in the market in terms of the bond rates.
Okay. And sir, last question is, considering the growth, any plans to raise capital going ahead?
There is no requirement. If you look at our capital at the end of September, it was 15.2. As of March, it is 14.91, but I have given an explanation whereupon 34 basis points we had allocated for unamortized figure of our pension liability, as a result of which the capital allocation, capital ratio appears 14.91. Otherwise, in reality, it could have been 15.25. Against the approval what we have taken from the board for raising 6,000 crores from the market, we have already done that. 2,000 crores from Tier 2 and 4,000 crores from AT1 bonds we have taken from the market. So as of now, even for envisaging a credit growth in between 8 to 10% during year 2022-23, the capital what we currently have is more than sufficient.
And your view on any expectation from the budget?
Budget, I don't think capital allocation is one area. That is probably if one or two banks require, because of particularly the zero coupon capital what they had given, where RBI has come out by reducing the net present value, as a result of which capital adequacy has come down to a couple of banks. In those cases, probably government may support. That is from the capital perspective. From otherwise banking perspective, I don't think any specific announcement could be there in the budget, but budget should, what we expect is might continue on the decisions or declarations what they had done in the earlier budget related to allocation for infrastructure in terms of port segment, aviation segment and road segment. And also there are green shoots where probably private investment could come in industries which did not happen even after tax reforms that have come from 1st of October 2019. So these will give opportunity for increase the investment in industry, as a result ancillary and MSME, as a result job creation. So the challenge in front of the government, I believe, which is even eloquently discussed in the public domain, is job creation. Probably they will be concentrating more on that area during this budget.
Okay. Okay. Any worry on the restructured book that some of the accounts can slip into the NPAs?
No, we don't have a worry. If you look at the restructured book itself is very low in our bank compared to our debt outstanding. It is around 18,000 crores, both together OTR 1 and OTR 2. And so far, cumulatively, there has been a slippage of 1,200 crores, and in this quarter it is only around 500 crores. We don't have very large concern in that area. Collections have improved, units are doing well.
Okay. Got it, sir. Thank you and all the best.
Thank you.
Thank you. We have the next question from the line of Shashank Verma from Axis Mutual Fund. Please go ahead.
Hi, sir. I had a couple of questions. First, on this SMA2, what will be the number for less than 5 crore accounts, sir? Less than rupees 5 crore?
It is around 14,000 crores.
Okay, because last quarter this number used to be, I think, 7,500 crores. So.
No. It was high. That was also, you see, last time 7,500 is more than 5 crores. Today it is less than 3,000 crores. 3,600.
Yeah, because of Air India. Okay.
Correct. Last time we indicated to you Air India was there. Correct.
Right. One thing, sir, on your notes to account, there is this restructuring of MSME advances under that Feb 20 circular. The amount seems to have reduced from 2,700 odd crores to 1,200 odd crores. What will this reduction be on account of?
No, some of the amount could be because of identification in NPA, and some of them we have invoked but then not implemented.
Okay, so this amount either would have slipped or would be included in, this would have slipped, right? Because, or it would have come back, is what you are saying.
Not entire amount. If you are looking at an MSME, perspective, the slippage overall has been only 765 crores in the entire year.
Okay.
If you look at for the current quarter, it is around 300 crores.
Okay. So one last question from my side on this ECLGS. So last you said that the number is 19,000 odd crores today. I think this was 14. Sorry, correct me if I'm wrong. And this was 14,000 crores last quarter. Will is it done now, or is there something else which needs to be pending for implementation, etc.?
No. There's no question of any implementation because in GECL it is a matter of sanction and disbursement. So 19,000 crores overall. 1 minute. Overall disbursement is around 16,000 crores, and the sanction is 19,114 crores.
Got it.
So recently, if you look at various industry representatives have represented to RBI for the extension of this time, we'll have to wait and see. Otherwise, it is a good profile. Existing accounts where units are running, they needed the support which we have extended. As you rightly say, last time it was 14,000 crores.
Sure, sir. Thanks a lot. Thank you.
Thank you. We have the next question from the line of Abhijit Sakhare from Kotak Securities. Please go ahead.
So first one is again a clarification on SMA2. If I recall, you said ex Air India, that number was 12,000 crores as of second quarter, and you just said that number is now 14,000 crores. So has it actually increased, excluding Air India?
No. It has decreased. The amount was high. Last time also when we have given to it was above 5 crores only. Including Air India, it was almost 7,000 or 8,000 crores at that time.
No, I was talking about the accounts, including accounts less than 5 crores.
I do agree. That is what I am saying. There is no increase, it is a reduction. Earlier it was much higher figure.
Okay.
Total figure, if you look at 1 minute, I will give you SMA2, December 21, is 19,537, including everything, that is, put together 5 crore and above and 5 crore below. Okay? Hello?
Yeah.
And whereas in September it was 27,000 crores.
27,000. Okay.
Yeah, there is a reduction of 8,000 crores.
Understood.
And in fact, there also, where the collections have improved, if you look at the real slippage, it was very low at the end of December. So going forward by March, this figure will be further reduced.
Understood. The second question is on lending rates. We have an exhibit on the breakup across MCLR repo-linked loans. So what would be the average lending rates across these different benchmarks?
No, different benchmarks. Oh, that data I'll have to check and give it to you properly. Page number? Okay, 1 minute. No, BP. No, he is asking for the average rate in each benchmark. We have not calculated that. Yeah, overall we know, but then we can come back to you on this. We'll look at in each category, for example, BPLR, MCLR, RLLR, this category.
We are at 7.1 on an overall basis. So
correct.
Yeah. What I was looking for is, let's say, how much higher is MCLR versus, let's say, repo or some of the other rates.
The only thing is you can have a just guess on weighted average basis regarding the composition, but then we will calculate and then come back to you.
MCLR is the highest amount in the composition.
Because if you look at the percentage, it is very high in terms of the MCLR at 44.7%.
Right.
In composition.
Yes.
Right.
Okay, understood. And sir, on this one, is it possible to know what's the incremental lending rate that we are doing on the corporate side the last couple of quarters?
Yeah, incremental lending rate at the corporate side is very low, at this point of time. So at least it is better in the last 1 month because in December, when RBI started VRRR, the price at which we were getting the rate when we are putting money with RBI was 3.97. So that has bettered the position. Now still a lot of improvement is required. We are expecting that beyond after February, there would be a better improvement in the minimum level of lending for the incremental towards the corporate.
But do you expect that the transition from MCLR, away from MCLR, would still put pressure on the overall lending rates, even if the overall system level rates continue to go up?
It will be. See, the problem is high liquidity has brought very unhealthy competition, and the shift towards other benchmark, even other than RLLR, for example, GSEC based and then Treasury bill based, those rates are lower compared to the rates offered in MCLR and RLLR. So the shift towards that has been high if you compare even from March 21 onwards. So I expect this to continue for some more time. When the liquidity gets reduced, all those things will get factored. Then we will also be very careful in offering the rates under TB rate, TB linked and then GSEC linked.
Understood. The last question is, are we expecting any sizable recoveries on the corporate side in the next few quarters?
No, not very bigger accounts are there, except that Shrei, where our exposure is around 2,800 crores, but we don't know when it will take some time. But Syntex is one case where we are expecting recovery. Our exposure is roughly around 1,200 crores in that account.
Shares of 50%.
And we can get good amount of recovery, which is in the final stages. Our anticipation in NCLT is roughly around 1,000 crores recovery before March, and the non-NCLT mid-corporate segment around 2,000 crores, and the general recovery involving RAM and other things around 2,000 crores. So overall 5,000 crores recovery we are expecting by March 22.
Got it, sir. Thanks a lot.
That is in Q4.
Thank you. We have the next question from the line of Rahul Jain. Please go ahead.
Thank you for the opportunity. So I have two questions. So one, sir, what will be your outstanding non-specific provisions as on December? Second is on the restructuring. So what is the outstanding restructure book, including COVID 1.0, 2.0, MSME and any other restructuring? And also on the slippages front, can you give us the breakup of segmental slippages? In the PPT, you have shown the fresh slippages breakup, but overall, including the debits in existing NPA accounts, what will be the total segmental breakup?
Okay. Now, coming to non-specific provisioning, it is not very high because whatever provisioning in standard advances and restructured standard advances and the standard advances where the resolution is yet to take place in terms of RBI guideline provisioning is required, these are all the only provisions. If at all there is a provision excess done other than regulatory requirement, it is an NPA what we have done. Like I have already indicated in case of Shrei, we have increased the provisioning. There are a couple of accounts where we have increased the provision much more than required so that we can protect the balance sheet in a better manner in terms of the recoveries which we forthcome in those accounts. So non-NPA category specific provision other than these categories is not there. Then what was the other question is asked? Restructured book is already I have indicated to you 17,854 including OTR 1 and OTR 2. OTR 1 is 5,892 and OTR 2 is 11,862.
Thank you. We have the next question from the line of Ankit Bansal. Please go ahead.
Hello.
Hello.
Mr. Bansal, please go ahead.
Good afternoon, sir.
Good afternoon.
My question is, sir, what are your targets of net NPA and gross NPA for Q4 and for the whole year?
Q4, it should be less than 12 for gross NPA, and for net NPA, very aggressively less than 4.
Okay. Sir, my next question will be, sir, what I'm seeing your results, I'm seeing overall growth. Sir, but the shareholder value is not increasing. Sir, what steps are you taking to increase the shareholder value, their positivity? Company में भरोसा कैसे आप कायम रख पाओगे? How could you keep the positivity of shareholders in the PNB?
Right. See, 50% of the answer to your question lies with you only, and 50% with me. The reason is, the more and more analytical understanding of our results and the kind of confidence shown by the analysts will get percolated into the market, the impetus and positivity to be created. Second reason was the public sector space share market has been topsy-turvy in the last so many months, more than 1-2 years. Except probably there are 3 scripts: State Bank of India, Bank of Baroda and Canara Bank. In the last 1.5 years, there has been some stability in terms of the price. Frankly, admitting before you. Now coming to the role of ours, we will be working very hard henceforth, because it is not that we have not worked very hard. There were occasions where our price has moderated very well. Even it has gone crossed 50 rupees at some point of time in the last 6 months, but again it has come down. So the kind of negative legacy which we have inherited from 2017-18 onwards, we are working towards shedding that very consciously, but it is taking time. Now, if you look at, clearly analyze the balance sheet, we don't have many skeletons in the board, and large corporate segment, we are not seeing any slippages. Growth has been very steady. Capital we have improved over a period of time. Now we have the capability to lend, even to grow at 8 to 10% time. So I expect that 2022-23, the growth is expected, the share market price also would improve. The most important thing is, when you talk about higher NPA, at the same time it is an advantage for us that we can show good amount of recovery with 82 provision coverage ratio, including TWO, and more than 60%, the recoveries will go towards increasing the profitability. So strong areas we would like to embark on talking to the people by showing the results, so that we can improve the market price. If you look at the guidance what we had given in the last 1.5 years in terms of profitability and other areas, we have achieved that. 2021 we gave a guidance of 2,000 crores, we have done. 21-22 we gave a guidance of profit between 4,000 to 5,000 crores. Already for 9 months we have achieved 3,250, and our profit could be even more than 4,000 crores and touching 5,000 crores by March. So we are achieving what we are giving the guidance. It is just a matter of analytical understanding of our balance sheet and positivity coming into the market. 50% are more on the analyst side, and on our side as well, whatever responsibility is there, we will take it forward.
Thank you. We have the next question from the line of Jay Mundra from Batliawala and Karani Securities. Please go ahead.
Yeah, hi sir. I have couple of questions, sir.
Yeah, please.
First is on ECLGS, sir. So, the quantum has increased by around, if I look at quarter on quarter, it has increased rather sharply by around 30% to, this number that we have shown in presentation. Is it fair to assume that, you have given loans to the people who, because the scheme was liberalized, so ECLGS 1.0, it was extended by 1 more year, and you could have disbursed additionally 10%. So, a large proportion would have gone there. Is this the right understanding?
No, I don't like to subscribe to the view that it is liberalized. It is more, canvas has been increased. More coverage has come. Earlier, some of the people genuinely requiring the GECL were not eligible. If you look at successively GCL 1.0, 2.0, 3.0 and 4.0, it is more of covering more and more MSME borrowers, rather than liberalizing the determining factors for selecting them. So that way, the amount of sanction what we have increased is more attributable to GECL canvas increase in covering more accounts. For example, this tourism industry, and then other industry, and even amount beyond going 50 crores, 100 crores. These are all the reasons why we have increased. Quality is very good. Absolutely, there is no problem.
Okay, understood. And second, sir, I mean, you had given the total of restructuring book of around 17,850 crores.
Correct.
If you have the, this breakup into corporate, retail, agri, and MSME, maybe, if you have that breakup.
I'll give you. In case OTR 1, it was 5,892 overall, which comprises 652 from MSME category, and corporate category is 4,777. Personal was 459, and others were 4 crores. That is related to OTR 1. And in terms of OTR 2, it is personal 4,933, small business 1,056, MSME 5,873, whereas corporate was not there in OTR 2. So total OTR 2 was 11,862, OTR 1 was 5,892. If you want a combined figure, corporate remains 4,777, MSME is 6,400 crores, personal segment is 5,400 crores, small business is around 1,100 crores. That is the position.
Right. And sir, if I were to include this MSME the earlier scheme of MSME, it is over and above this, right?
Absolutely.
That overall,
before OTR 1, the restructuring what we have done under MSME, if I remember exactly, it is 4,500 crores.
Right. But that number has come down, right? I mean, that number keeps...
Correct, you are right. It has come down.
Right. So whatever is the outstanding, I should be just adding on top of this number.
Correct.
Right. And there is no erstwhile SDR or those accounts, right?
No, nothing is there.
Okay, okay, sure. And sir, have you completed the divergence exercise for this financial year? Previous financial year? And is there any...
March 21 they are yet to give the report, but March 20 is already done.
Yeah, no, March 21, sir.
21 they are yet to give the report.
Okay. And
so I don't expect anything. We don't expect anything. Even in case of one account, where non-funded facility also we have done the provisioning.
Okay, understood. Because the other, one bank had showed, IDBI had showed some divergence in their, they have reported some NP in their divergence.
They must have received the report. We are yet to receive it.
Correct. Okay. And any, sir, do you have the breakup of the slippages, like 3,000 or 3,400 crores kind of slippages? How much is caught? Yeah.
1 minute. That is retail 704 crores, agriculture 903, MSME 1,480, and others 344.
Sorry, so other is 430, right?
No, 344, 344.
Okay, and retail is 709.
Yeah, agriculture is 900, retail 700, and 1,480, roughly 1,500 crores is MSME.
Sure. Okay, sir. And last question, sir. If I see your AFS duration, right, it looks like in the presentation it looks like your AFS duration has gone up versus last quarter. So just wanted to check in a probably likely hardening yield environment. Why do you want to position that way? That it looks like, or is this right reading or no? Because
currently investment profile PV01 is around 10 crore. Every 1 bips hike in the interest rate, the impact will be around 10 crore.
Okay. So if I look at slide 14, wherein you have given the AFS and HFT duration, from 2.38 it has become 2.71, right? So
yeah, correct.
And your AFS is also increased slightly. So would this be a very aggressive treasury stance in case, depending on whatever happens to the rate, you have made your portfolio more aggressive in that sense, whichever way cycle turns?
No, if you look at here, there is one difference. See, for example, when the interest reduction scenario, when you are booking the profits, you may not be acquiring the assets at that point of time, considering that it may not be viable. Whereas when the rates are firming up, you may look at an opportunity for acquiring. So it could be a balance factor which would have come to represent the position of 2.71 from 2.38, but it is not a trend. What I would like to say is it is not a trend.
Talking about the hike in the FS.
No, that is the duration only, sir. What is the duration?
Understood. Understood. Yeah, sir. And thank you, sir, and all the best.
Thank you. We have the next question from the line of Ashok Ajmera from Ashburn Global Services. Please go ahead.
Thank you for giving me this opportunity. And congratulations and compliments to you, Mr. Mallikarjun.
Thank you.
As a signing off, you have given the excellent set of the numbers as we were very much disappointed during the last quarter. I think the results were not up to the expectation, but this time there is a lot of improvement on the overall operating profit side, net profit side, provisioning, improvement in the asset quality. So my compliments to you. And we welcome the new MD and CEO coming in from 1st of February, Atulji.
Thank you.
And all the best to you.
Thank you.
Sir, having said that, I have got some, one is that small data numbers calculation. If you look at our advance figures, it is 6,92,807 in the balance sheet. And your advances total is 7,55,306. So if you out the non-provided figures between the gap between the gross NPA and net NPA, then there is a difference of 880 crores. Can I know in which account this 880 crores is lying, or
you see? But how you are calculating 692? Our advances figure is 755,306.
Yes. What I'm telling. That 692,807 is your balance sheet advances figure.
Provision, that is in balance sheet, that is coming provision.
Sir, let me give you the number.
Yeah.
The difference between the gross NPA and net NPA is 63,379. So it becomes total of 7,56,186, which should have been your advances number. But it is 7,55,306. So there is a gap of 880 crores.
We'll look at that immediately. I'm not able to get the point. However, we'll look at what calculation you have done. We'll just verify that, how it could be a gap of 880 crores.
Okay, sir, because point is very clear. The gap between the gross NPA and net NPA and the balance sheet advances to be added, and that should be your advances.
Correct.
Figure, global advance. But anyway, this is, I leave it for the calculation, and coming back, somebody, CFO, Mr. D.K. Jain can come back to me.
Correct.
On that. Sir, I also have an observation that when the amortization of the revision of the family pension, you have done as per the RBI rule of only providing 619 crores and leaving the balance of 2,475 crore. What was the need for the auditor to put it as a emphasis matter? Because that way there are many circulars of RBI, and if they are provided for properly, the provisions are followed. There is no need of any emphasis on that particular point.
What happens, generally these people follow how the results are declared for other banks. If in any other bank they show as an emphasis matter, they will also insist. It is like an innocuous observation because it is as per the dispensation given by the RBI.
Yes, of course. Some banks like Canara Bank has provided for the entire 5 years in this year only, this quarter only. So that's a different thing.
Correct.
But even if you have followed, anyway, this is also another point for the CFO.
We have taken note of the same. In fact, what we have decided this time is to provide for NPA accounts in a higher level than required. That is what we have done. But in the days to come or months to come, quarters to come, if it permits, we may do aggressively allocation from the even this pension liability as well. Though we may not keep for 5 years as dispensation given by RBI.
Sir, I have no problem with you are providing lesser. I mean, as per RBI, only I am also a chartered accountant.
Yeah, I agree with your point.
When you have followed something as per RBI circular, there is no need for emphasis on that particular point.
Correct.
What is my point?
Correct.
Now, sir, you have transferred the another.
Yeah, please tell me.
Point is, sir, transfer NPA to a transfer of 2,421 crore, where you have done the reversal of the provision of 860 crore, isn't it? What is the total reversal in this quarter overall of the provisions on any such account?
We are not transferred to NARCL. We are not transferred to NARCL.
Yeah. Nothing has been transferred.
You are not.
Nothing has been transferred.
Because NARCL is yet to check on.
Yeah, that is okay.
Only
That is yet to
NARCL we have done. Yes.
Okay. Sir, there is a drop in the aviation advances from, I think, 6,462 crores to 1,883. This drop is...
India 4,000 crores has been paid.
Yeah, fully paid. Okay. All right, sir. That is a good clarification.
Yes.
And, sir, looking at your advances growth trend, advances of the NBFCs are growing 89,000 crore to 92,000 crore. And also, you are growing into the, I think, little bit of a real estate sector. Whether this trend is going to continue, you have still, out of your sectoral allocation, something is still available for NBFCs to be given?
Our growth has been strictly in AAA and AA category. Whatever incremental we have given from 89 to 92,000 crores, 3,000 crores, it is in AAA and AA category. We were very conscious of that. See, in NBFC, always potential is available, but we are very, very carefully in moving in terms of the exposure. When our loan book is overall increasing, the percentage-wise NBFC also increases. There are other segments where we are looking for opportunity for lending, which will happen.
No, point well taken, sir. Sir, you in Shrey, you have done the, I think, provision for almost about 70% now,
Correct,
40
correct.
plus 30.
Correct.
Is there any specific reason? Because do you feel it will not be even 30, 40% or 50%? So why you are so aggressive?
That is not the reason. That is not the reason. The reason in providing is once it is settled, we'll get a right back. If you look at many of the accounts where we do provide 100%, instead of waiting for the RBI aging process, we have done earlier than that. It is nothing to do with the expected recovery in the account. We always want to have right back once the settlement takes place.
Okay, sir. Next is, sir, on the SR, 1,767 crore of SR under the various categories and rated, and finally some figure is non-rated because beyond certain years you don't require rating.
Correct.
How much provision have we made against these SRs?
It is close to 90%.
90% is the provision.
How much, sir?
In 2017 onward, entire SRs have been fully provided for. And earlier to that, close to 80% have been provided for. So overall, it will be roughly around 90%.
Overall, it comes to 90%.
Okay, that's great, sir. Sir, on the profitability front, on the segment-wise, if you see, sir, your treasury has given the profit of 2,023 crore, the income, treasury income, and the trading profit is 614 crore. And even if you take even the LAR also of 2,441 crore and 1,049 crore of trading profit, it only amounts to about 2.77% to 3.37% on the amount invested on the treasury, which is 3,79,761.
Correct.
So, do you feel that this kind of between 2.75 to 3.3 from the treasury is a good enough amount and the money should remain invested into the treasury assets?
Mr. Ajmera, you have to take into account the interest on investment also. Interest on investment and the trading profit both taken together, you have to arrive at the return on the investment. You are taking the trading profit in isolation.
No, and also the income from treasury.
Yeah. You have to add from interest income, you should take interest on investment, and then
so what could be the total on this 3,79,000?
The return on treasury is 6.24.
6.24%. All right, sir.
Thank you. Thank you, Mr. Shah.
Thank you very much.
Thank you.
Thank you. Ladies and gentlemen, that was our last question. I now hand the conference over to Mr. Suraj Das for closing comments.
Thank you. On behalf of Batliwala and Karani Securities, we thank Punjab National Bank management for giving us the opportunity to host the call. Thank you, everyone, and have a good day.
Thank you. Thank you very much.
Thank you. On behalf of Batliwala and Karani Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Yeah, thank you.